Welcome to another episode of Equity Mates. My name is Bryce, and as always, I'm joined by my equity buddy Ren. How are you going?
I'm very good, Bryce. Yesterday we were talking crypto.
Yes.
Today we are back on equities.
Feels
it is
good.
Equity Mates.
Yes.
And so I'm glad we're back on safer ground.
Yes.
And we have someone who's all across this safer ground. I was going to try and extend that analogy, and I kind of got lost in it. But we've got a returning expert who we're excited to go over to the US and unpack some of what's happening over there.
A lot happening over there at the moment. A lot of people trying to stir up markets, as always, and we're bringing in the chief content officer from.
Last time we interviewed him, there was 2 promotions within the
Chief
interview.
Investment Officer.
He went
yeah.
from Chief Content Officer to Chief Insights Officer to Chief
True.
Investments Officer.
That's right.
So fingers crossed he's CEO by the end of this interview.
Chief Insights Officer sounds better, but Alex Barrett from Stake, welcome to Equity Mates.
Thanks for having me back.
So, look, you are covering a lot of content, a lot of what's happening over in the US markets at the moment. And the big news last week was, of course, the news from Cathie Wood and her price target for Tesla.
The big news, Bryce, forgetting what's happened in the Suez Canal or anything else.
Yeah, it doesn't
All
matter.
that matters is what's Tesla's price target. But for those who maybe aren't watching it as close as Bryce has been, can you tell us what Cathie Wood came out with last week?
Sure. So one of our analysts put a $4,000 bull case price target and like a $1,500 bear case price target on Tesla by 2025.
And for people who are unfamiliar with what Tesla's at now,
It's at $600. So worst case scenario,
3 times your money.
essentially by 2025, which is quite broad or bold. And she assigns a 25% probability they'll reach this bull case and a 25% probability they'll reach the bear case. 50% chance they sit at $3,000, which would make Tesla, if it was today, the most valuable company in the world at over $3 trillion.
Wow.
Yeah.
Crazy.
I was reading somewhere, and correct me if I'm wrong, but like all of the publicly listed automakers at the moment together are about 1 trillion. And Cathie Wood's mid-level prediction is that Tesla will be 3 times the value of the entire listed automakers globally.
Yeah, and I suppose if you compare that to the traditional car manufacturers like Volkswagen, who will eventually go into EVs rather, they're already laying the groundwork and starting to produce some cars. They're only trading at a fraction of what these EV-only manufacturers are.
So she loves stirring up the market by releasing these pretty crazy valuations. But I guess also what was a bit unprecedented was releasing her analysis to the market as well. I think via Twitter she shared the full report that her analysts did. And are you able to elaborate on what her valuation is based on?
Yeah, so there's a few things that have to happen for Tesla to reach this $4,000, we'll call it the $3,000 target. The first is that Tesla sets up an insurance arm, which may or may not happen. On top of that, she predicts, or her analysts predict, that Tesla will set up a robo-taxi service.
Yeah.
So there's either the human-driven one where, like Uber, people can drive around Ubers and pick up passengers. Then in the bull case, and it sounds a bit futuristic, but Tesla will set up an Uber service where self-driven cars will drive around cities. When you arrive home, you're done for the night, your Tesla will drive out your own garage and pick up passengers, and you earn money that way. And what's absurd is that Uber, which is an established company which has Uber Eats attached to it and some freight operations attached to it, is doing about $20 billion in revenue a year this year. Tesla, which hasn't begun on this ride-sharing service, is projected to do $300 billion in revenue by 2025 in this bull case. So as much as Cathie Wood is respected and loved, and I'm sure anyone who's held her ETFs has performed well, when you look at this and you think, are they really going to get to $300 billion in revenue? You see why there's some criticism.
Well, the thing for me as well, like, pardon me, of those 3, I guess, key parts that she's based her valuation on, the autonomous vehicle and the ride-sharing network are not new to her theory. She's been harping on about these for years. So what all of a sudden when she had a price target of $1,500, a matter of, I think, sometime last year, to now that has resulted in her valuation even increasing, when really those 2 key elements she's been talking about for ages.
I think even before that, like 3 or 4 years ago, she put a price target out and said it was contingent on Tesla having like a robo-taxi network and autonomous vehicles. they hit that price target but haven't achieved those two things. So
Yeah.
she's just, I guess,
She's
pushed it
throwing
forward.
it-
Yeah.
it's completely weird and a bit warped.
I
but-
think we spoke about it last time I was on. If you take out Tesla from Cathie Wood's portfolio, it's essentially performed like NASDAQ tech or the S&P 500 tech sector. So it's really a tech portfolio with Tesla attached, and that's why she's been making these humongous gains.
Well,
Interesting.
Tesla is 8% of ARK's portfolio,
Yeah.
so she obviously has a vested interest in it going
I
well.
think that's $5 billion worth, which is
Wow.
a huge amount.
Not a small bet.
Yeah.
No.
So the interesting thing for me about this whole discussion is we talk about robo-taxis, fully autonomous vehicles, and an Uber-like robo-taxi service being futuristic. But it's not like Tesla is the only company pursuing this goal. Waymo, which is a subsidiary of Alphabet, has autonomous cars on the road in Phoenix, Arizona right now, taking people for rides. Without I assume there's a driver in the passenger seat that can take over, but the car's driving itself. So for me, this bull case the scenario may play out, but there's going to be more competition in this space. Google, I'm sure plenty of other companies. Amazon bought the Australian, the co-founder was Australian. The name escapes me now, but Zoox. Zoox was the Australian co-founded ride autonomous vehicle company. Like, there's going to be other players and there's going to be competition. Does she talk about the competitive landscape that she thinks will play out?
Not particularly. I'm sure thinks the whole market will grow and Tesla will take its slice of the pie.
Have Tesla even said that those two are part of its ambition?
Yeah.
Okay.
Elon
'Cause that
is
would
an
be-
ambitious bloke.
Or is she trying to tell Elon, hey, mate, if you want this price target, you got to execute on it?
The thing is that Elon Musk has come out every year since 2014 and said, all right, we're close to having completely autonomous driving. They've developed quite a long way, but you still can't put a car on the road and completely trust it. And every year it gets delayed by a year and it still hasn't arrived about 8 or 9 years since he initially said it's coming.
Well, let's move on to another company, obviously over in the States, and that is Twitter. Obviously, if you're in FinTwit, you would fully understand the value that it can provide. A pretty phenomenal community of, I guess financial professionals and also wannabe financial professionals. You're a finance professional, but
Definitely a wannabe.
and the information shared is pretty phenomenal. But the headline here, Alex, is that Twitter is financially finally realizing its potential.
Yeah, Twitter rather, has over 300 million monthly active users, but really apart from ads and some data, they're not making the most of that huge user base. So finally, they're starting to monetize that. They've introduced a feature, this is about 3 or 4 weeks old, this news, but they've introduced a feature called the Super Follow, where you could follow equity mates and pay a $5 fee and get access to special content and stuff like that. And we've seen how successful Patreon has been, Substack have been on a smaller scale. And really, if you look at Facebook, a lot of their best ideas have been copied.
Yeah.
They've seen, especially with Instagram, they've seen Snapchat succeed in certain areas, so they'll do the same thing. And now Twitter's finally turning up and saying, we see Patreon, Substack find a lot of value in producing or giving access to exclusive content. Let's do the same. They also launched in the last week or two Twitter Spaces, which is essentially Clubhouse on Twitter, and Clubhouse has been doing very well recently, and now Twitter's...
For people who are unfamiliar with Clubhouse, I know you're a fan, so can you explain to us what it is?
Yeah, I think there's definitely value. I don't know if I'm a fan yet. I don't know if it will live on, but essentially Clubhouse frames itself as the audio-only social network. So it thinks people have got a bit of screen fatigue over the last year, working from home, always being on Zoom, looking at their laptop. So this is a social network where you can hop on and only listen to people speak as if it was a podcast, but it's live. So essentially radio, but on your phone and more directed at
Yeah, you can interact with the host.
Exactly.
Yeah,
If they let you.
If they let you.
Yeah.
So Twitter are copying, following the Patreon model and introducing, was it Super Follows?
The Super Follow.
And then they're following Clubhouse, which has been a big success after launching pretty recently in the US with Twitter Spaces. How do we think, or how do analysts, or how do the market think these new features are going to help or hinder Twitter?
Yeah, well, to start the year, I think from January to the start of this month, March, Twitter was up about 60-70%. So the market was thinking positively about the situation, but it's been a tough month for markets, and I think in the past month it's fallen about 20%. Probably more to do with the market than the company itself.
I think for me as well, like investors love subscription models and they love recurring revenue. And as soon as Twitter can, to your point, start really leveraging the 330 million active users they have and start getting that monthly recurring revenue and just building that over time, there's no doubt. You look at what happened with Apple, you look at what happened with, you know, these businesses that have gone from, I guess, low sort of subscription or recurring revenue and changed the dynamic of their revenue mix.
I think Microsoft and
prices.
Adobe, who does the graphics software, they were flat for mostly a decade until 2012, and then they introduced their subscription models, and I think Adobe did in 2015, and they skyrocketed, went exponential.
Well, yeah, Twitter's been a company that for so long it's had impressive user metrics, and you know, like it's got a really sticky user base that use it a lot, but the financial performance just hasn't been there. So you know, hopefully this is the start of the turnaround story. Yeah.
Long Twitter, not financial advice.
No.
And to close out, obviously we can't go past what's hot on stake at the moment or over in the US. No doubt you mentioned that the markets have been sort of tough at the moment. How are you sort of seeing that all playing out?
Yeah, so even if the indexes aren't particularly signaling a massively red month, I think the S&P 500 will be probably down 3 or 4% to finish the month. A lot of the stocks that stake traders own, and I suppose most investors in the high momentum stocks have really fallen off. I mentioned Twitter's down 20%, but ARK itself is down 30%, and a lot of the stocks they own are also down like that. What's interesting with this dip is normally anytime there's a bit of blood in the water, some red in the market, you see investors switch to, at the very least, some volatility ETFs, probably some short ETFs. This time it seems people are buying the dip rather than trying to get short. May suggest, if you believe what the retail trader thinks is accurate, that this is only temporary. So we've seen a lot of people starting to buy companies like ARK and the big tech stocks, some levered tech ETFs, just to try and catch a rebound.
And are there any particular, I guess, sectors or industries that are particularly hot for stake traders at the moment?
Yeah, semiconductors. So it's been in the news recently. I'm sure you've heard over the last month or two that there's a semiconductor shortage globally. It's something to do with increasing demand and really restricted supply. And we've got NVIDIA, AMD, Taiwan Semiconductors, a few semiconductor ETFs into our top 50, which normally they hang around the top 100, but becoming increasingly popular on stake.
Yeah, it is a pretty interesting time to be in markets at the moment. I saw a tweet this morning, speaking of Twitter, about the pull-off that's happened in those big momentum stocks, and it's pretty amazing when you don't check the markets every day and you come back and in a month things are down 30 or 40%.
Why aren't you checking the markets every day?
That's what we say here, don't check the markets every day. So yeah, I can understand why people are now seeing this as a buy dip the opportunity, but is it here to stay, or you know, it's an interesting one. We'll see play out. What are you doing, buying the dip?
I'm always averaging into the dip.
Nice. Classic Equity Mates response. But that is all we have time for. Thank you for joining us, Alex. As always, it's a pleasure, and we'll check back in a month or so on what is going on over in the States.
Thanks for having me.
That is the end of another episode of Equity Mates. If you would like more information on what we do, you can head to equitymates.com. We're on all the socials, or you can send us an email at contact@equitymates.com. But Ren, tomorrow, Watchlist Wednesday.
Watchlist Wednesday. Very exciting time. We've been talking a little bit about infrastructure on the podcast, and we did a show on it on AusBiz last week. Now we're bringing it to Watchlist Wednesday. We've got Sarah Shaw from 4D Infrastructure coming in to talk about 3 themes or stocks that are on her watch list. So
Nice.
Tune in, same time, same place. See you all tomorrow.
See you then.